Hey guys, welcome to 700 Plus Credit. This is Ruben Alvarez again. Today we're going to be talking about debt consolidation, and that way you don't get confused. You understand what debt consolidation means. So whenever you see those TV commercials, you will not be confused. But before we get to that, I need you to go ahead and subscribe to our channel and also follow us on our social media. There's different types of debt consolidation, and today we're going to talk about this debt consolidation. One debt consolidation is getting a loan and paying off all your debt. That means that you're going to apply at any financial institution, credit union, bank, or whatever it is to get a loan, typically with a lower interest rate. That's the point, to be able to pay off all your bills and have one payment at once. Only that you're able to make payments throughout 36 months, 48 months, 60 months, whatever the case may be, as long as it benefits you. That's a traditional debt consolidation loan. Now, there's the other one, which is debt consolidation, the ones that you hear on TV. If you owe more than $10,000, you might benefit from it, right? Well, that's a little tricky, okay? Let me tell you why. Because you have to be past due 60 to 90 days from any loan that you might have. And what they do, they add it all together. Let's say you owe $11,000. So what they will do, they will add all those $11,000 together and renegotiate the rate with the same bank you have, but you had to be past due. And what they'll do, they'll work you a better interest rate with a lower principal amount. And again, they'll give you 36 months, 48 or 60 months, depending on what benefits you the most. The problem with that is that you're not going to be able to finance anything while you're in the debt consolidation. What that means is that within the 36, 48, or 60 months, you're not going to be able to finance an automobile, buy a mortgage, get any type of loans, because you're in debt consolidation or debt counseling, okay? So you got to be very careful which one is the one that you're doing. Are you getting a loan, one lump sum, and paying off all your bills with a low interest rate? Or you're actually getting into a debt consolidation, debt counseling, okay? So keep an eye on that and be very careful with it. Let's talk about a traditional debt consolidation, which is getting a loan from a financial institution, credit union, national bank, whatever the case may be, with a lower interest rate, okay? Well, on that one, there is secure and unsecure, okay? A unsecured means that they're just lending you money based on your credit history, based on you, right? Who you are, how well you pay, and all of that. That's more of a personal loan, okay? Now, there is secure debt consolidation loans, meaning that you have to give a title for a vehicle, and they'll lend you money based on what the value of the vehicle is. Or they'll do a mortgage loan, let's say, right? Based on your mortgage, on the value and all of that. So they can do that as well. So, or boat or trailer, whatever you might have as to secure the loan that they're going to give you. Debt consolidation is worth it when you have high interest rates with big amounts, and you want to get them all together on a traditional debt consolidation loan, and the rate will be a lot lower on your new loan than the existing ones that you have. So I strongly recommend you to put all the bills on the table, look at the interest rate, calculate how much are you going to pay over the term on that loan, and then look at that loan for the debt consolidation if it's worth it. Are you going to be able to save thousands of dollars, or in reality, you're not saving much? So be careful with those, even on the traditional debt consolidation, because sometimes we might get excited and say, well, my payment is going to be a lot lower, but the term is very long. So at the end of the day, you're probably going to be paying the same. Now, the most common one is credit cards at 20%, personal loan at 9%. So that's a no-brainer, right? It's 10% lower, so why not? Go ahead and get a debt consolidation loan. Now, on the other hand, a debt consolidation is worth it when you are past due, okay? And this is the non-traditional one. This is the debt consolidation, debt counseling. When you're past due 60 or 90 days, and you definitely don't know what to do, no one is going to lend you at this point. Why? Because you already past due. So it's going to show on the credit report that you cannot pay those bills anymore. So your best shot will be go through a debt counseling, debt consolidation, the ones that you see on TV, right? And try to see if they can help you renegotiate your interest rate. So if you have a 20%, that might be able to get it to a 10%. If you have $10,000 of bad debt, they'll probably go ahead and lower it down to, in some cases, I've seen it 50%, which is a great deal because now you have $5,000 that you're going to be able to save. But you have to be past due, and you have to make sure that you have a big amount. Typically, what they require, 10,000 or more, and it will probably be worth it. But you got to be understanding. You got to understand that it's going to affect your credit history while you're on the debt consolidation, debt or credit counseling on it. However, at the end, it's going to be okay because you're going to be saving a lot of money, and you can always rebuild your credit after that. The beautiful thing here about 700 Plus Credit is that we can help you with the traditional debt consolidation, and we can help you with the not so traditional debt consolidation, which is the one that you're past due on your bills. On the left-hand side, let's say the traditional one, we are affiliated with hundreds of banks that we can find you the best rate possible with the best terms and the best amount to help you consolidate those high interest rate, high balance credit cards or personal loans or whatever. We'll get you an answer actually within the first 15 minutes, and then you decide what you want to do, which is very simple. Just call us. We'll go ahead and take an application over the phone, and we'll get you an answer right there and then. Now, on the other hand, which is the credit counseling debt consolidation, what that means that you're past due on your payments and you don't know what to do. You cannot get a loan anywhere, but you want to consolidate those loans and you want to be responsible for that. You don't want to let them go for charge-offs. You want to do the right thing. You just don't have the money to do the right thing. You can always call us as well, and we're affiliated with some great debt consolidation companies that are going to be able to get you the best rate, the best everything, renegotiate those interest rates, and that way you'll be able to get where you need to be. And we've done with thousands of clients. Go ahead and check our testimonials. We got plenty of testimonials where we've been able to help clients do debt consolidation. All right, guys, well, I hope this debt consolidation video was able to help you and understand what are the different types of debt consolidation. Now, stay in tune with us because next time we're going to talk about advantages and disadvantages of debt consolidation. But I'm going to ask you before I let you guys go, again, to subscribe and follow us on our social media. And again, if you have any comments, okay, go ahead and put them there so we can answer. We love comments. We love the positive feedback that we can get, and we'll go from there.